traditionally investment advisors told you you should put something like 60% of your money in stocks and 40% in bonds. And those are two big asset classes. Stocks are going to give you maybe a little bit more upside, but there's more volatility. And then bonds are going to give you a 4, 5, 6% interest rate with, lower volatility. And so two uncorrelated asset classes are going to reduce your overall risk, and you're going to invest and do great. And there was some logic, I think, in this financial advice that has emerged over the past maybe 60 years as a part of something called modern portfolio theory. We're in a different situation, though, now than at any time, I think, in the past 100 years. And the reason is the interest rates you can get on a bond, on a treasury bond, today are about 4% for a 10-year bond. The inflation rate's 3%, right? And so your real return on a bond is only a 1% interest rate.
Immigrants across the globe, welcome to the Immigrant Pod. Today, like every time we meet here on this platform, it's always exciting and we have different guests. It's through your kindness, it's through your likes that our platform continues to grow and to develop. And it's your challenges that have led us to today's guest. So, buckle up and jump on the ride because this will be a very interesting ride. We are speaking with Aman. Aman, welcome. Before we get into markets, money, and migration, let's start with an icebreaker, I would say.
Great.
Roses, thorns, and snacks. Get us going. Yes.
Yes. So
Very interesting perspective. Why are those values important for you as an immigrant to teach them to your children?
yeah, when we teach the kids,
Verjee, um, who are you? Why should our listeners really pay attention to the next hour, hour and a half of our conversation? Fantastic, fantastic. So, money, why is it relevant in society? And more so, why is it a driving force toward migration or for migrants?
Yeah, I think
Sometimes I have conversations with immigrants, and they don't feel like they have a value to bring into the marketplace. You, on the other hand, um, among that elite group of immigrants that have done that, right? Your friend Elon Musk has had added tremendous value in society, and I don't know, 300 years from today, we'll probably be talking about Elon Musk. Now, as someone who's worked across Silicon Valley giants like PayPal and eBay, how has your immigrant background changed how you look at the global perspective of the immigrants' experience contribution in society? So Silicon Valley is really, to me, an interesting experiment for America in terms of how it blends the backgrounds of multiple entrepreneurs and really focuses them into competition and to growing large companies that have really shaped the way the world works. Looking at today's immigrant entrepreneurs, what's a common mindset, maybe if you want to frame it that way, or strategy do you see that sets today's immigrant entrepreneurs in comparison to native born founders?
Yeah, that's a great. That what we find with the immigrants, I think disproportionately, not everyone, but you see it a lot, is a more adaptive mindset. They tend to be flexible. They tend to not be so wedded to one idea. They, I think, just understand different cultures and different rules and different values will occur in different countries. They know that because things are going to be different in different markets, you're going to have to be able to speak to your customer and really understand what they care about. So there is an empathy for the customer that that I think is more common with immigrant founders than native-born founders. We also see, I've just seen the work ethic of immigrants being really, really strong, and I think that's just it's a bit of a self-selecting thing. Like the kinds of people who want to leave a country, in my case, Canada, but India or China, and they want to come to America to build something. They're risk takers. They know that there's going to be some pitfalls and things that don't work well, but they're willing to overcome that in order to have the upside, and they're willing to work through that adversity. Those are all tremendous founder traits, and again, I think disproportionately common with immigrant founders. And I think the other benefit of America and maybe the Valley is we tend to attract the best people. I mean, a lot of people want to come to America, but it really takes something special to make that trip and then to end up, in a place like the Valley with a company that you're building, or studying at the schools that they've studied at. They tend to be very high performing people, and so I think that's another filter. The kinds of people who can make that journey and make that trip and then be successful, and not give up and go back to wherever they came from is also a really good signal and filter.
So, Oman, many immigrants feel like they're shut out of financial tools,
Hmm.
like 401ks and investments in total. What's your blueprint? If I phrase this question from an immigrant who's sitting on the benches with you watching your daughter playing soccer, what's the blueprint for the first 50K an immigrant earns in the US?
Yeah, by blueprint you mean how do you earn that? How do you earn that money?
How do you invest it?
Yeah, how do you invest it? Um,
Yes.
I think I do get this question on all the time. I talk to my kids about it, and I do also guest lecture and teach a module at Harvard Business School where a lot of the students, probably a third of them are immigrants, I think, but the others are not. But they all have the same question. It's a little bit more relevant, maybe, to immigrants who are in the process of building and maybe don't have a lot of equity to build. But a lot of these kids are going through it, and what I tell them is, here's what you should do. If you don't already have a plan to do this, you should like stop stop watching this podcast and go put together this plan right now. It's very easy to do. You should have a IRA or a Roth IRA, a retirement plan that you can invest and it'll grow tax free. I've asked my students, like I asked them 3 weeks ago when we started the semester, how many of you have an IRA? I think maybe two hands went up out of 50 in the class. And these are business school students. They're 24, 25, 26 years old,
Yeah.
financially savvy, financially literate, and at one of the top schools in the country. And yet very few of them have a retirement savings plan. And I'm asking them, why don't you have a retirement savings plan? Oh, I don't know. My high school didn't tell me to do it. I didn't learn about it until. What is an IRA? How does it work? Like, there's just a lack of financial literacy about this stuff. So understanding investment vehicles like an IRA is the first step, and opening up one and then putting money into it is the second step. And then I asked him, what if you just, let's just do a little bit of a math exercise, okay? If you opened up an IRA, let's say when you were born, you get an IRA, and you put somebody on your behalf puts in $1,000 every month, every year. You're allowed to put up $7,000 into an IRA or a Roth IRA. But let's say you don't even do that. Just do $1,000 a year until you're 18. How much money do you think you'll have when you're 18 years old? And the hands go up and people are guessing. The answer is about $50,000. So there you go. That's how you get to your first $50,000 tax free. But some people think it's less, and some people, are surprised by how big it is. But it's the math of compound interest. And then I say, what if you keep on going? By the time you're keep on going past the age of 18, keep building on that $50,000 and do it until you're 30, and assume that you just do an index fund that compounds at 7, 8, 9% a year, like the stock market has for 150 years. Well, how much do you think you'll have by the age of 30? Everyone is wrong when they start guessing, but the answer is about $150,000. So now you've got $150,000 compounding in an index. You don't have to go crazy and buy AI stocks or crypto or do anything risky. Just buy an index fund that matches the returns of the US stock market or maybe a global index. And then by the time you're 50 years old, if you keep on doing this, you'll be a millionaire, and it'll be tax free because of the Roth IRA and how it works. And then you'll be self sufficient. And then you can retire or do whatever you want to, or if you want to keep working, that's fine. But you're your own boss. I think immigrants have a little bit more of this intuition. Like, I just need to save every little bit, save a little bit, save a little bit, and continue to compound and build wealth. I don't want to go and take a big risk on an AI company that I don't fully understand. You can do that to an extent. There should be a little bit of a budget that you have for what you want to do. But the most important investment principles are invest a little bit every year, focus on stocks, not on bonds. We can talk about why that is. And then just focus on compound interest and dollar cost average. Market's going to go up, market's going to go down. You can't pick and time the tops and bottoms in the market. So you should continue to invest through cycles. And if you do that, like at any time in American history, if you had done that over the past 150 years, you would be a millionaire by the time you're 50 years old. So that's what I teach my kids to do. And then after that, then we talk about how to build a great startup and how to be Warren Buffett.
Can we talk about stocks and bonds?
Yes, my favorite topic. Go ahead.
So, why stocks and not bonds?
Well, traditionally, investment advisors told you should put something like 60% of your money in stocks and 40% in bonds. And those are two big asset classes. Stocks are going to give you maybe a little bit more upside, but there's more volatility. And then bonds are going to give you a 4, 5, 6% interest rate with lower volatility. And so two uncorrelated asset classes are going to reduce your overall risk, and you're going to invest and do great. And there was some logic, I think, in this financial advisor advice that has emerged over the past maybe 60 years as a
Mhm.
part of something called modern portfolio theory. Okay, we're in a different situation though now than at any time I think in the past 100 years, and the reason is the interest rates you can get on a bond, on a treasury bond today, are about 4% for a 10-year bond. The
Yeah.
inflation rate's 3%, right? And so your real return on a bond is only a 1% interest rate, which is historically very, very low. And it seems like there's more and more of a push for interest rates to continue not to yield more than 1 or 2% in real terms. So that's a real downside of bonds. And especially if you're 25 years old, maybe it's different if you're 65. But if you're 25, I'm thinking, is that really what you want to sign somebody up for? Is a lifetime of 1% real interest rates? Add to that something else that's never happened before. The US debt to GDP right now is about 120%, meaning the amount of debt the government has issued compared to the GDP is 120%. It's never been this high before. The only time we were even close was the end of World War II, when we were at about 100, 105%.
Yeah.
So with the amount of debt that's been issued and the continuing deficits that we have in the US, Western Europe as well, inevitably what's going to happen is the government issuing this debt is going to have to print money to cover the debt. As they print more money, it's going to create inflationary pressure, and that probably means interest rates will creep higher over time. Between you and me, would I buy a 10-year government bond? Would I give the government of the United States a loan for 10 years at a 4% rate of interest? That seems crazy to me. And I don't think that interest rates are going to stay this low forever. If rates go up, then bonds are going to get devalued and depreciate. So for that reason, I would say if you're a young man or a young woman, you probably want to be mostly in equities and don't bother with debt, given where interest rates are right now.
So that's really interesting you say that. Um, do you still believe the American dream still exists financially?
Yeah, I think so. I guess it depends on how you define the American dream.
Yeah.
If I can offer a definition, but if you have a different one, I'd love to hear it. I think
Oh
of what you're
God.
saying is can somebody come to America and from nothing, work hard, play by the rules, and build wealth, build self sufficiency. Wealth is. I used to think I can come to America and I can be rich, and I thought I did really well. And then I met my friend Peter Thiel, and I was like, "Oh wow, I can't be. Maybe I'm not rich." And then I thought, you know what? If I work hard, maybe I can become like Peter Thiel one day. And then I met Elon Musk, and I was like, "Okay, forget it. Now I'm definitely those are the two founders of PayPal. I'm out of my league, but I do know that I can put aside through the what I just talked about, working hard, playing by the rules, being smart, using these investment assets to build wealth over time. I know that I can become very financially successful, and I think anyone can do it in this country.
Earlier, you annihilated that, you know, there is an opportunity when it comes to investments like IRA, and really at this point, I have to let people know that I'm not a financial wizard, but I do know one or two things to be able to phrase this question really to you.
Yes.
For immigrants who've made a little bit of wealth and they've built a little bit of equity, what would their aggressive or accelerated investment plan look like?
So if you want to take more, if you want to accelerate your investment plan, meaning I think what you mean is, do you want to get rich? How do you get rich faster, right? How do you? Is there an accelerated plan to a better financial outcome? Um, it's going to come with higher risk. So I think that is inevitable. That's one of the first things you learn in finance. Is there's no financial return without risk, and really risk in finance means volatility. So there'll be ups and there'll be downs. And so what I think I would say to somebody is, if your goal is to get rich more quickly, the best way to do that is, one, you got to keep your own personal expenses low. Like don't spend what you don't have. And so whatever you make, you're going to have additional ability to invest. Think of every dollar you make as I teach this to my kids. Every dollar you get from grandma, you can spend it on that Nintendo Switch, or you can invest it in some stocks that we'll pick out together. And my daughters usually go half half. So they'll say, "Well, I want to spend some of it. That Bobo looks pretty good right now, but I tell you what, I'll put half of it into Netflix or half of it into some stock." And so the better you create financial flexibility for yourself by being disciplined on your costs and living a prudent life, the more money you have to invest. And then if you want to take more risk, then there are lots of returns out there. There are stocks you can buy that I think are benefiting from a huge wave in artificial intelligence and technology that will have great returns. Although it'll be volatile, they'll have great returns over the long period.
Mhm.
Crypto, I'm actually a big fan of crypto and Bitcoin. I think those are also things that people should be thinking about investing in. On a personal level, you can also choose to work. I mean, I made this decision myself. I chose to work at PayPal when it was before it was a public company, and I took a pay cut. Right, I could have been a management consultant and made, I don't know, $200,000 a year coming out of grad school, or a lawyer at a law firm making good money, or I could have taken a pay cut and got paid half of that at PayPal. But then you also get paid in equity and in stock and in stock options, and over time, that was a great decision for me. The downside is, you don't if you take a pay cut, then you have to be careful how you spend your money. So you can't spend the money. So when you're 25 years old making $200,000 a year, you can live a great life. But if you're making $100,000 a year, you're going to have to make some decisions and some priorities. But then the benefit is, because you're getting paid in equity and options, then you get that over time, and that could be a much bigger payout over, let's say, 5 years. So
Let
depending
me
on who
jump.
you are and where you want to work, that could be a major factor as well.
Let me jump here because this is really important. You said something that's really, really important. I would hate for our listeners to miss it.
Yeah.
If I am skilled as an immigrant, I am talented, I know I have value to bring into the marketplace, and I'm looking for an opportunity, pay versus equity.
Yes.
How do I negotiate that?
I think that is most companies. If you're working for a startup or a small business, There is usually some set of parameters where the company will offer you a options package, and they'll offer you a salary, but the salary will be lower than what you might get at a bigger company. So typically, what you'll do is you'll start with a decision as to who do you want to work for. In the technology sector, like this is an example, you could go to work for down the street. Facebook is right down the street. Google, Apple, Tesla. They're all local here in the Bay Area, and you can go get a job there. Most of your compensation is going to be in salary with some kind of a bonus, and there'll be very small bands in terms of what you get in terms of equity every quarter or every year. If you go to a startup, you can do whatever you want to. These startups are very flexible, and it's just a negotiation. And normally, what you'll do is you'll say, "Look, I want to get paid a certain amount of money. I will take a lower salary, and you have to figure out what you need to live." And the Bay Area is not cheap, but if you live your life correctly, like you have a small apartment and maybe have a roommate and don't spend money that in a silly way, you can get by on a much lower salary than what Facebook would pay you. But you tell the startup, I want to get an equity compensation package that is equal to or greater than my salary. So if you're paying me $100,000 a year in salary, I want an options package that's worth at least $100,000 a year. And if this company does great and the company doubles and triples and quadruples in value, like we hope and expect and dream, then that $100,000 a year in options can become three, four, five times that. And you get that every year. So typically these options are refreshed every year. And
Mhm.
so it's very easy to imagine working for a startup where you just ask for more than half your comp in equity, that there's a path to making $5-10 million over, like a 5-year period.
If you had to build financial literacy from scratch
Yes.
for an immigrant, let's say
Yes.
one who's newly arrived in America and they're also an entrepreneur, where would you start? Banking, credit, taxes, or investing?
I think you would start with the very basics. I think the very basics of it is, let's assume you know how to run a your costs and your income in a reasonable way as an individual. Um, I'm starting very basically because you have to realize many people don't even know how to do that. They don't really have a discipline around household budgets. We used to
Yes.
teach. Did you know we used to teach in America home economics? Used to be like a required part of the course, required part of the American curriculum up until the 1960s, as far as I can tell.
Hmm.
Somewhere in the 1970s, they stopped teaching home economics to everybody. It turned out that 80% of girls still took home economics in the 1970s. And then 80% of boys took shop. So they knew how to fix a car. So up until 1980, a boy would marry a girl. That's no longer true, which is great. But this is what it was like. You had a couple, and that unit would be able to fix a car and also run a household budget and cook and to be able to provide for themselves. And now people are staying single longer. We don't have couples forming the way that we used to, or families forming the way that we used to, and we've stopped requiring home economics and shop. So only about 25% of high school students are taking some form of a budgeting class or know how to run a household budget. So immediately, this is why people buy $10 matchas from green tea or from Starbucks, and then complain that the cost of living is too high and that they can't afford an IRA where they're saving for themselves. So it's
Hmm.
a little bit silly. But if you know how to run a household budget, I think the first step is the investing, because that's something you can control very quickly. Know what an IRA is, know what a Roth IRA is, know the difference between stocks and bonds and index funds, and then how to avoid fees on these funds and what ETFs you should be buying, and then experimenting with companies and what to buy and what not to buy, and how to do that in a way that builds and compounds wealth. I think the next phase after that is like taxes. Not everyone pays taxes in the U.S. It turns out that only the top 20% of Americans probably pay 80% of the taxes in America. So there are things that you can do when you get up into higher income brackets to manage your taxes and reduce your tax liability. But for most people, you're paying a withholding tax and a labor tax, and that's it. And you only have to start paying attention and learning about taxes when you start doing things like getting capital gains, or having investments that win and then reinvesting those winnings into other stocks and building wealth that way. So that probably comes, that's probably the next phase of sophistication that you would solve for. But that's what I would do. I would start with household budgets. and then get into how do you save a little bit to make yourself self-sufficient, and then after that, okay, taxes and estate planning. Let's go deep on that. But that's the end game.
You've led over 500 startups, at least from what I've gathered thus far. Um, did you see a bias, or conscious or not, against immigrant founders in pitch rooms? And what was basic among those who were doing the pitches?
Yeah, so we have invested in, at the firm I was at, we called it 500 startups. We invested in over 3,000 companies. While I was a COO there, it was the most active venture capital firm in the world. It's an accelerator here in the Bay Area.
Hmm.
So we saw tons of pitches. We would do 30 or 40 companies that would go into each batch, and we did these batches every 3 months. And then to get to 30 or 40 companies, you probably saw 300 pitches. So we saw a lot of them. And honestly, my business partner Dave McClure has kind of written the book and written the presentations that are available on SlideShare, which sort of tell founders how to do it, what's the best practice on pitch prep. What I'll normally tell my founders are simple is better. You should be able to tell your story in 5 to 10 pages. Um, you want to start with the customer and what does the customer want, and then go to what problem am I solving, and then get to your solution. A lot of founders get into, here's my solution, here's why my thing is clever, it's better, it's faster, my algorithms work better, I have a PhD from MIT. And like, stop with all that stuff. Nobody cares. Your solution comes last. Start with who's the customer and what's the problem you're trying to solve. And if you can be smart and empathetic to the customer and then come up with your solution, then you have a much better chance of success. Founders who are solutions first, I find they fail 9 out of 10 times. And the ones who have a better sense for the customer and for the problem, much higher rate of success. And I think by the end of my 500 tenure, I would always say you've got to have a customer facing CEO, somebody who really knows those pain points. Otherwise, we just won't invest.
What's more important? A great idea that as soon as somebody starts spewing out the idea, you're like, that's a great investment opportunity and obviously would solve millions of people's problems, or identifying a team that can actually execute?
Oh, super question. I think it depends on the stage of the company. I think when you are in that very first, you're trying to get your first check from a firm like 500 startups.
Mhm.
I think the idea is really important. If you have a business plan and a thought for what you want to do, a market you want to go after, you've identified a customer pain point, something that you really think you've got an angle on how to solve. Um, that's a big part of that initial pitch, and then you'll get your first check, and then you'll have to prove that it works and build a product market fit, which essentially says, now am I seeing success? Are customers giving me a signal that they need this product? Does the market and the product fit, and can I make money off of it? When you get later and later into a company, and I've been a chief financial officer for later stage companies for the most part. When I got to PayPal, we were still before our IPO, but we were already over 100 million in revenue, and we kind of knew we were past the idea phase. We were then about team and about scale and success, and that's how we determined the success. And the reason I think that I draw that distinction is you have to have a good idea to start. By the time PayPal got to be 100 million in revenue, there were like 9 different payments providers with more or less the same idea. There was a company owned by eBay called BillPoint. There was a Citibank had a product called See to It. There were all kinds of money transfer companies that were competing. Yahoo had a Yahoo Pay product. Google tried to come up with Google Pay. So they all had the same idea by then. But then it was the team and who can execute and who can scale. So the later stage companies, C, D, you better have a team and you better be able to demonstrate progress in terms of real results. Otherwise, I don't think you can get funded no matter how good the idea is.
You have seen companies that have outperformed the market. You've seen founders that have outperformed the market, or they bring some kind of a unique edge into a venture market, right? Um, what are some of those common traits that you're looking in leaders who've been able to achieve this?
So the most successful founders, Um, the ones that I have experienced. So if I go back and think of like Peter Thiel and Elon Musk were my early experiences. They are. I mean, they're both brilliant individuals. They're both dynamic. I think they are both very contrarian in the sense that they will say things that most of the market doesn't believe. They think that things can be done, even though maybe the conventional wisdom is that it can't be done. And so it'll give them a fresh perspective on how to do something a different way.
Mhm.
Um, both of them, and I think the best founders I've met are very disruptive. They want to go up. They want to go after large incumbents and large businesses, and they know that the odds are stacked against them, but they don't really care about that. And they're very resourceful. You know, they can take hits and keep adapting and keep moving. And so you might hear about it. I mean, in my career, you mentioned some of the highlights in my career. We talked a bit about my background and successes at PayPal and Sonos, and then at 500 startups. But along the way, I've been at companies that failed and that we had to reset the company and sell them, and then you have to kind of move on and adapt, right? And so for even the best entrepreneurs, you have probably a lot more failures than successes. In some way, it's no different than baseball. You can see I'm a big baseball fan because I've got the New York Yankees from 1927 on my shoulder, and some of the best hitters in the world, Lou Gehrig and Babe Ruth and Tony Lazzari and the whole Murderers Row was an incredible team. But Babe Ruth had a 360 career batting average, which means he got 36 hits and made 64 outs, right, out of 100 at bats. So a lot more failure than you only remember the hits, the home runs, and you remember the 1932 World Series called shot. You don't remember that he also set the record for the most strikeouts in baseball history. And
Mhm.
so that's got to be the founder mentality. It's got to be, I'm going to strike out, I'm going to strike out, I'm going to strike out. But when I hit it, then it's going to be great. And so to be able to get over those negatives and to overcome that adversity is critical for the. I've seen that with all the best founders.
So, for immigrant entrepreneurs that have taken the risk, they've gone out there and they've taken a punch in the stomach, and things did not work out the way they planned they would work out. Walk us through how you have walked through in failure and out of failure and into success.
Yeah, we've made a lot of investments in companies that ultimately was a second or third time founder who was successful. So sometimes we just knew this is an exceptional person with all the traits I just talked about. The idea is interesting, but this person is exceptional. They have drive. They've got a great imagination. They understand the customer pain point, and they understand the market they're going after. Very, very resourceful and a lot of hustle. They're working hard and working at it, and they're just convinced that they're going to be right. And then that company doesn't go anywhere, and for whatever reason they run into some issue beyond their control, and then they come back later and they say, I want now I have a new company, new idea. Either I learned from that last one, same idea, but I think it'll work in a different country. I observed that what I thought would work in that last startup was it didn't end up working, but that was specific to where I was trying to do it, and now I want to change location and do it in a different country. Or I have a new idea, a different twist on the same thing, and now I think this new idea will work. And it's the same person with that benefit of experience now as somebody that we still say, well, okay, now we'll invest in your second company and maybe your third company. And so, in a couple of cases, what we've seen is when the person fails, the perspective and the attitude has to be one of let me reflect on what happened and why it didn't work, and let me take the lessons away from that I can then work on, and then apply that to my next business plan. And so, what I always try to work with on these founders when they have that setback is how do you learn and how do you apply that to your next business plan. In the Valley, we call it failing fast. We try to teach people to fail fast. If you're going to throw out an idea out there, just make sure it's lightweight and it's not disastrous if it fails, and then learn from it and keep adapting. And so that's one of the lessons we teach in our accelerator.
So, people say so much about Elon, but for you personally, what are some of the things that you've taken from Elon Musk that you have used in life from spending time with him in the same room?
Yeah, I have. So I spent a lot more time with Peter and that side of the company. That's where I got hired in. I had a little bit of an experience with Elon in, I guess it was February of 2000 or January of 2000, when I was helping to write the business plan, and he was on the board, but he was a shareholder. He's an incredibly driven, incredibly dynamic person. He's a what I learned and what I observed was that he can be difficult to get along with because he's got a very decisive way on how he wants to do things. In At PayPal, it manifested with an operating system he wanted to implement at the company. He wanted to use Unix, and a lot of the other PayPal engineers and management team wanted to use Windows. And there was a big debate over like, hey, which operating system do we use for the company? And he was not willing to, take a vote or be democratic about it. He wanted to do it his way.
Mhm.
And the downside of that is, you can be difficult. It can be difficult to work with someone and get along with somebody who's so opinionated and strong. But at the same time, if you have that humility to learn from him, then he's a great person to learn from. He's energetic, he's intelligent, he asks all the right questions, he's committed to the project. Every business he's ever been in, he's at it 24/7. He just never sleeps, as far as I can tell.
Mhm.
And so he's always trying to work the problems and build these companies. And so if you are willing to go along for that ride, and that's that's what you're signing up for. You're not signing up for work life balance, and you're not signing up for. I can't even imagine telling Elon or Peter, for that matter, hey guys, I'm not going to come in on Friday. Okay, can I take a mental health day? I'm just feeling I need to do a little bit of self care. Like, no, there are companies and jobs where you can do that. Working for Elon is not that experience. Elon's experience is, hey, I want to go to Mars. Can we get to Mars? How do we get to Mars? And we're going to do it, in a way that literally no one thinks is possible, with like all the energy intensive launches and all that stuff. Like, we have to rewrite the book on the space time continuum. We have to launch ships into outer space in a way that defies basically everything that's been done in aerospace today. Let's go. How do we do that? If you have that attitude and you want to learn from him, I think it's going to be a great ride. And so what I would tell someone who wants to work for Elon is it's a great choice. Just understand that he's going to be working 24/7 and sleeping on the floor, and so he expects you to do that too. And if you don't want to do that, then that's just not the job for you. Go do something else. Lots of other great jobs out there, but that's just not the job for you. So it's a lot of that is just matching your personality, what you want with the company that you want.
So I am assuming at Sonos and PayPal, you must have experienced great products, and what great products, when great products meet financial discipline, the result just becomes something very profound. Where do most first generation founders mess up the economics of a startup?
Oh, that's a very well asked question. Yeah, let me just start with the PayPal and Sonos experiences, and I'll kind of answer that second part. So at PayPal, we actually messed up the first wave of the product. I actually remember Peter pitching me in 1998 to come to
Mhm.
PayPal. And at the time, it was the product was, hey, here's a product that will let you beam money to a friend. And I'm like, I don't understand. What does that what does that mean? And he said, well, take out your Palm Pilot. I'm like, okay, I don't have a Palm Pilot. I'm on Wall Street. We don't use Palm Pilots. He says, all right, I'll give you a Palm Pilot. Pretend you have a Palm Pilot. How would we split a bill over a pizza? Let's say the pizza's $10.12, and I want to beam you $5.06. Here's a great product that works well, and I can send money to you, and you can receive it, and it's fraud proof, and it's great cryptography. Actually, a very compelling pitch if you were in the valley and wanting to use mobile products.
Mhm.
I don't exactly know how this is going to translate to the broader market or how we made money on it. That was sort of a afterthought. That evening, I actually told my mother, I am thinking about maybe going to work for Peter Thiel. And she was like, oh, I remember Peter, nice young man. I'm like, yeah, that's him. He started a company called PayPal. Oh, what does PayPal do? She asks me. And I say, well, you can beam money to a friend. And I try to walk her through like how that would work. And she's like, I don't get it. I don't get it. I don't get it. Immigrant mother from Africa living in Canada. I don't have a Palm Pilot. I'm like, okay, well, there's a web product. You can go to the internet. You can create a account at paypal.com. How do I do that? I walked her through it. I got to put in a password. Yeah, I got mom. You have to put a password in. I'm gonna forget my password. Just do it. I sent her the $5.06. It took like an hour to do it. And then she's like, how do I get the money? I'm like, well, it's in your. I mean, what do you mean? It's in your PayPal account. She's like, yeah, but how do I get the money? I'm like, I don't understand. And it took me like a minute to realize. Now I understand what she's saying. She doesn't have she wants the cash,
Like
right? Like
the
she's an
money,
immigrant
yeah.
mom. She doesn't know about technology and the internet. How does she get the money? I'm like, oh, easy, mom. Go to paypal.com. Okay. Give me a minute. She forgot her password. So I had to reset her password. And then she's like, now what do I do? I was like, put your bank account. She's like, are you crazy? Put my bank account at paypal.com? You moron. No one's going to do this. And so I'm realizing, yeah, I think this is where maybe, we messed up on the first product. It was a cool idea, but it didn't actually connect with the customer and my mom being a customer. It didn't really, she didn't speak their language and they didn't understand the value of it and why they'd want to do it. And so, 20 years later, my mom is now using PayPal and Venmo, but this was 25 years ago where this was just not a thing. And now, luckily for Peter and Elon, they pivoted. Once they realized that mobile product wouldn't work, the next generation was solving a real problem on eBay. They had eBay sellers and eBay buyers and people trying to buy, at that time, collectibles and Beanie Babies. And it was all checks and money orders. And they realized, oh, we can build a product for that market that it's not even that technologically not as complicated as beaming money to people and the wireless
Yeah.
cryptography, but it works great and it actually solves what people want, which is I want to take money fast to sell my Beanie Baby. And so I think we're oftentimes where people go astray is they focus on the solution, they think the solution's great, they forget about what the customer wants and what the customer needs, and then they don't connect with the product market fit. And the most successful founders, PayPal, Elon, David Sachs was our chief product officer. He was fantastic. Sonos, they built basically to what they knew who their customer was, and they built to what their customer really needed at that time.
So there's this term, because you're close to this family, right? There's this term that a lot of leaders in business use, the PayPal mafia. And for the majority of the population, when we hear the word mafia, we associate it with a bad thing, right? We don't associate it
Yes.
with, hey, there's this group of people who've done amazing things to change the projection of what our society looks like. Talk to us about the PayPal mafia and what value they've been able to accomplish in adding to society.
Yeah, the term mafia, you're right. That doesn't sound very good. I guess you associate that with a crime family, but there's
Yeah.
also loyalty and connections. And it just, I think that was a bit of a media thing just to make it sound interesting so that you could get clickbait and people would talk about it. And then there's some pictures taken, and then the PayPal team was like, oh, that's funny. All publicity is good publicity. Let's get dressed up as, mafia members and promote the idea. But generally, that concept was the founders of PayPal, as I said, were Peter Thiel and Elon Musk were the two principal founders, but also Max Levchin, who then went on to serve on the board of Yahoo and started a company called Affirm. Roelof Botha was the CFO of the company until recently he was the head of Sequoia. Ken Howery was the founder of PayPal. He's the ambassador to Greenland right now and was the ambassador to Sweden before. David Sachs was the COO. He's gone on to, founded Yammer and he's runs Craft Ventures or did, and now he's the AI crypto czar under Donald Trump. On and on and on. And Reid Hoffman and Keith Raboy and there's the founders of Yelp and the founders of SpaceX and Tesla. They all kind of came from from this PayPal network. Peter took his money and from that invested in Facebook, where he was the principal, I guess, the first institutional check into Facebook. So a lot of the ecosystem that's been built up around us has come from some of those early folks on the PayPal team. Um, I think that was just a function of it was a really great team, very high performing, very dynamic, pretty tight network of people. A lot of them had gone to Stanford University together, and then they came out of that experience. Interestingly, with PayPal, it wasn't that big a win, like by today's standards. It felt really big at the time. There was a $1.5 billion IPO, which at that time seemed like, oh, that's a huge IPO. But now you get, companies like Airbnb and Palantir and OpenAI, and these are going to be 50 billion, $100 billion IPOs, maybe $1 trillion IPO, who knows. But
Yeah.
1.5 billion was like, you come out of that experience as for me, I was like a relatively junior member of that team. But even the most senior founders, you make a lot of money, but it's not like life changing money. It's not like you're not going to be a billionaire. You make enough money and you get experience and network where you realize I can this is fun. I enjoy doing this. I kind of need to, I can take a couple years off, but I can't take forever off. And so it made them a little bit hungry to get the next win and to build the next company and to keep doing it again. So a lot of the value I think it taught was experience and resourcefulness and high performance and the rewards that it bring, and also just enough money to make that next goal desirable and achievable.
You've seen hype cycles, and listening to you is just profound. But you've seen hype cycles from 2000 and beyond. Is there an Enron 2.0? Is AI a real thing? Is crypto too dangerous? And how, as an immigrant investor, should I evaluate some of these opportunities?
Yeah, let me start with the easiest one, which is AI a real thing? It definitely is. I do think it's a transformative technology that in my lifetime I've seen maybe a couple that are like it. I think mobile in the 2000s was the same, and the internet in the 1990s was the same. And now AI it's going to change everything over time. It's going to change how we work and workflows. It'll transform many industries, how we communicate, how we pull information from all the sources around us. It is real. If I had to teach, my kids or I guess any, not just any immigrant, but anyone, I would say you've got to be AI literate and thoughtful about like AI and robotics to know what that stuff is, even if you're going to be I don't know, even if your desire is to be a Broadway singer or my daughter will tell me right now she doesn't need math and doesn't need STEM and doesn't need to understand, computer science because what does she want to do? Well, she's 14, so she wants to sing and dance, and she wants to perform in her school play, and she wants to maybe be a YouTube influencer. So I asked her, well, how are you going to make money as a YouTube influencer? She's like, well, I'm going to hire someone to do that for me. I'm like, okay, you're going to hire someone to run your money and who knows math? Yeah. You're going to hire someone to run your money who knows math and you don't know math? What do you think is going to happen to you? So you have to know AI and robotics, I think, in order to be able to get into the world that we're heading into. Just like you need to know how to use computers. No matter what your industry is, computers are now just a part of everyday life. Um, is there another Enron 2.0? Enron was a very unique case. I actually write about it in my book, which is coming out at the end of the year, called The Brief History of Financial Bubbles. And to talk about the internet bubble in 99, 2000, which had companies like Amazon and PayPal and Nvidia and Netflix and Salesforce, a lot of great companies, Google, a lot of great companies came out of that bubble, and a lot of them didn't make it, like Pets.com and others that failed. But that's just creative destruction. That's just companies win, companies lose, and an aggregate they did really, really well. There was another piece of that bubble at the end, which we don't often remember now, but it was true. The WorldCom, Global Crossing, Enron, these are the telecoms. So we're laying a lot of dark fiber,
Yeah.
fiber optic cable that just wasn't being used, even though the internet usage was increasing dramatically. At the top of the bubble, 99% of the fiber was dark. And WorldCom, Global Crossing, and Enron were all doing shady things. They were misrepresenting financials. They were self-dealing. They were selling capacity. They were doing something called capacity swaps and then calling that revenue. That telecom bubble pulled in 20 times more capital than the internet bubble. The internet winners, Bezos and Peter and those guys, they didn't sell at the top of the bubble. They actually held their stock for the most part. The Enron and the Global Crossing and WorldCom, like CEOs and executives, they did actually sell stock at the top of the bubble and took money off the table. Um, so that was a very negative piece of that, and there was a lot of financial fraud. We saw the same thing with fraud in the U.S. during the railroad boom in the 1870s and 80s. At the end of that boom, there was a lot of fraud that also had to get cleaned up and led to financial regulation and trust busting. So I don't know that there was another Enron out there. It'd be kind of silly to say that there's no way it's going to happen again because that just invites it to happen again, and then you look silly. So there probably is a lot of noise out there. What I would look for as an investor or just as anyone working at one of these companies is, is the company, are they running a tight financial ship? You can look at cash flows. You can look at, are they being audited? Is another good question. As an investor, you ask these kinds of questions now. We should be on watch for these signals that there's going to be bad activity in these companies, and probably there is going to be some. Inevitably, there always is some negative, fraud and stuff like that at the top of markets. But there's a lot of real technology and a real lot of creation that's going to happen as well. So we shouldn't lose sight of that.
Talking about opportunities, right? There is a very interesting AI company out there, and obviously plenty of competitors. But specifically looking at OpenAI, where do you see American based companies that are challenging OpenAI into the future competing against China?
Yeah, I think OpenAI they seem to have a really big lead with consumers. And in my experience, it's almost always the case that if you have a lead like that with consumers, that's a winner take all on the consumer side, like Google with search,
Mhm.
maybe PayPal with payments in the early 2000s. It's hard for me to see any American or other competitors, including in China, who will bypass OpenAI on the consumer side.
Yeah.
There's a lot of enterprise on the other hand. There's a lot of enterprise focused AI companies as well. Anthropic is probably the leading one, but there are a number of others as well. And one of them is Cohere, which is a Canadian company. And so I think that's going to be a much more competitive space, and there'll be a lot of winners in enterprise AI. So I think that's the way that we would segment the market. It's as far as like U.S. versus China. It does seem like there's a race going on between American companies and Chinese companies. I do think America has one important edge. Well, they've got a couple of edges. They've got more capital available. They've got leadership in OpenAI and Anthropic, and then the big Mag 7 companies like Google has Gemini, and then Meta has an open source version called Llama. I think those are the technological leaders right now. So that's a plus for the US. The downside for the US, I think, is that despite the technological leadership and the money going into it, a lot of AI will be constrained by energy. You
Mhm.
have to build data centers somewhere in order for all these things to work, because the compute required by all these companies is extremely high, and it's going to put a stress on our energy demand that we've not had, probably since the oil shocks of the 1970s.
Yeah.
So our ability to create an energy infrastructure to enable that will determine America's success. Um, China is, I think, they're ahead of us. They're way ahead in terms of their energy investment. They're ahead on solar. They're standing up 10 nuclear power plants a year.
Yeah.
And in California, we're down to one nuclear power plant near San Luis Obispo. It's called Diablo Canyon. So we're way behind in terms of our energy infrastructure. And in California, where a lot of the AI is happening, we also have the highest energy prices in the country. So that's not good. And that, I think, means that maybe China will have an edge, and some might even say will be the economic superpower going forward. The last thing, though, that I think does favor America is, like, which way does immigration go? Where do people want to go to live? I don't know that many people who want to leave America to go and live in communist China. I just don't. I know plenty of people who want to come to live in America. In fact, we have so many that we have to turn down most of them. And now we have a squabble over how many immigrants to take in and how many H-1Bs should we have. And there's like a divide, internally. We're trying to figure that right answer out. But over time, China has not built a lot of great businesses, despite their technological leadership and despite their energy capabilities, and despite the fact they graduate many more, AI scientists, computer science engineers than we do every year from their universities. They haven't built a lot of great businesses, because when they do have those successful people, invariably they want to come to America to build companies here. And so I think as long as we have that edge, then I would probably tip towards the U.S. being the leader in the race for a long time.
So, if we can revisit the conversation about crypto, what's the real use case for immigrants when it comes to crypto
I
beyond,
would
of
divide.
course, speculation?
Yeah, I would divide crypto. I think that's the key part of the question is what let's go back to my Peter Thiel conversation and my mother. And
Yes.
let's say you told me, "Hey, Aman, I've got a great idea." Okay, what is it? A digital asset that is cryptographically impossible to hack, and you can store your money, on a computer, and it's going to store value, and it'll be really important, and it's liquid, and it's going to replace gold, or it's going to basically be a store of value for you. And I would just ask him, okay, why do you need that? What problem are you solving? And I don't know of a good answer to that question. Like, you can't spend it, right? You can't use it to buy anything. It's not a medium of exchange. If you're saying I need something where I can store value, okay, the US dollar does that. What's wrong with the US dollar? Like, my mom would tell me, what is wrong with the US dollar right now? But it's so easy to put money into a bank account with US dollars. So why do I need Bitcoin or, Dogecoin? The only answer I think that does make sense, which kind of makes me think about, again, the why and the value of crypto. Bitcoin, I think, is valuable. It is commonly owned, well understood. A lot of people own it now. In fact, if you ask 15-year-olds or 21-year-olds, which is a lot of my audience because they have kids, would you rather own crypto or gold? They'll all say crypto. I have crypto, Bitcoin. I own Bitcoin. I will own Bitcoin. I'd never own gold. And so you can ask yourself, well, if gold is $1 trillion, asset, or a $3 trillion asset, how come Bitcoin can't be, equal to that or greater? That seems like a form of digital gold and a store of value. There is something there. There is also value in Bitcoin because as the US dollar continues to inflate, if we print money in order to finance our deficits, then there's value to having Bitcoin as a stable supply of money, I guess, that cannot be inflated and cannot be printed without somebody cracking the algorithms using quantum computing. And so there is a value to Bitcoin, I think. Any other crypto asset, I think, is very hit or miss. You really have to figure out, what is this? What is the use case? Why do I need it? And can I explain it to my mom or to somebody broadly in America who wants to buy these things? And I would say for an immigrant, owning some Bitcoin is probably smart, making that part of your portfolio. Maybe Ethereum. Anything else, I would probably say don't bother unless you really have a knowledge of the space that makes you think you know something other people don't.
So, if we can delve into PE and venture capital, um, what should or what does a disciplined immigrant investor need to understand about secondary markets? Um, and why might it be safer than early stage investing?
Yeah, the secondary markets are really a marketplace where established companies are able to sell, or investors in established companies can sell their shares to new investors. Think of a company like, let's take Palantir as an example. They were a fantastic IPO, but for 15 years before they went public, they were a private company. And so if you're an employee at Palantir or if you're an early investor in Palantir, you're going to be holding those shares for 15 years before you get a chance to sell in the IPO or afterwards. If you don't have a 15-year time horizon, you maybe want to take some money off the table after 5 years, after 10 years. What do? That's where secondary investors come in. They come in and they buy shares of Palantir, and they'll usually do it before the company is a public company. But for our investors, we get into a company like Palantir. Our big win is actually SpaceX. That's the biggest company in our portfolio now. Um, and we get those companies when they're already 5 or 10 years old. So for us, we're buying out existing investors, giving them liquidity, and then we're waiting for the IPO or the exit. And for us, it's maybe a 5 or 7 year ride. And then the benefit is you get to own a company like SpaceX or Palantir, and maybe if you're negotiating, you get a 30% discount to the fair value of the company. Because an investor in Palantir says, "Hey, I want to sell my shares. I want the money now. I don't want the money later. And if I need to sell right now, I have a tax bill, I have kids in school, I want to buy a house, I'm willing to give up something on price." And so usually secondary investors like us can get in at a discount to the last priced round on great companies. So in a way, it's safer than early stage companies because you're getting a discount to fair value, but also you're getting into companies like SpaceX and Palantir and Canva is another big company for us. You're not getting into Series Seed or Series A companies where you don't know what the prospects for the company are. Even if they are successful, it's going to be a lot longer for them to return capital to you. So we try to shorten the time horizon in terms of liquidity to our investors and de-risk the portfolio.
I hate to get into conversations of hypotheses, but you've managed over $450 million in capital. If you are building an immigrant fund,
Yeah,
to empower immigrant founders right now, what would be your thesis?
it had to be immigrant founders,
Absolutely.
and the investors could be whoever I wanted.
Yes.
Yeah, I think what I would do, I think I would start with identifying the types of traits we talked about, and explaining and really making sure we understood why it is that immigrant founders are going to be more successful and what makes them more successful than your average founder. We know that there are some traits that immigrants tend to have that are already disproportionately good. I think the easy ones are they've come from abroad and they've come from a long way and they've already had to overcome adversity. So there's a benefit and a stick to itiveness and an ambition and a drive that they will typically have. They can also adapt to different circumstances. And so if you can really isolate and find the immigrants who exhibit that, that would be one filter. A challenge for immigrants is also often that because they have to navigate a new country, a new language, a new system. Um, those are all obstacles, right? Things you have to overcome. So how is it that you plan to overcome those, and how do you not let those get you down? And if you can refine your filter in terms of company selection, where you can isolate the immigrants for the positives, the energy, the ambition, and the entrepreneurial success, the risk taking that immigrants have, and then also look for, all right, who knows who has been able to mitigate those challenges of succeeding and building a company in a new environment. I think that would be the founder selection criteria I would push for. And maybe the one last thing is, all right, if you have an immigrant founder and you know that they've come from other countries where they just understand different cultures and different markets, can they scale their business and can they bring their company abroad and find new markets faster than other founders might, and use that to form the basis of your selection criteria.
If I can bridge that, there's about 10,000 baby boomers that are retiring every day. They also hold the majority of personal wealth in America.
Yeah.
Immigrants who are positioned to take over this wealth, how should they plan or position themselves?
Yeah, I think you're right. There's a lot of wealth in the baby boomer generation. It inevitably passes on to somebody. I guess the premise has always been, well, the millennials or the next generation, will benefit from all that wealth transfer.
Mhm.
Um, and I don't know that that's actually going to be the case, because I mean I've talked to enough family offices and people who were in that baby boomer generation, which I guess would have ended in 1964, or the one after it, which would be from 1964 onward. So at that point, these are people who are have built wealth and have also a certain set of values. I would just say if I'm not quite in that baby boomer generation, but I am Gen X, and I do have values in terms of work and the work ethic and being able to build wealth. Um, and I'm pretty clear about what those values are. Like I'm old enough to now be very clear about what I think is right and wrong. And if my daughter or my two daughters did not demonstrate those values, or I didn't think they could manage money properly, or I didn't think that they could live their personal lives in a way that would preserve wealth, like they were susceptible to a bad marriage or bad relationships or being taken advantage of, or didn't have financial literacy like we talked about, because they're not managing their budget and they're not demonstrating they can invest and grow wealth in a values aligned way, I don't think I would leave them my money. I'd be stupid to leave them my money. Why would I do that? I'd rather put the money in a trust. I'd rather put the money, in a foundation where it supports my values. So it's not a gimme that the kids today will inherit all that wealth. I think increasingly there's going to be sophistication around where that wealth goes and how it's transferred. And so the best advice I would give to immigrants or anyone is just to be able to demonstrate that you can manage money soundly, that you can make good life decisions that protect your investments, and some of that is just being responsible and saving, like we talked about, but
Mhm.
also making good personal and life choices in terms of your habits and who your friends are, who you hang out with, what communities you're a part of. That just demonstrates that as that value transfers from one generation to the next, that you will continue to serve the values of that, what you talked about, the baby boom generation. The values won't be exactly the same because every generation has its own values, but at a minimum, you have to be able to build and preserve wealth and be responsible about it to kind of earn that right. So that's what I would That's what I would hope that my kids would demonstrate, as a way to get money from me anyway.
Aman, global powers are obviously shifting, and immigrants, to that end, we do have opportunities. Um, how do you see China, India, Africa, and the likes shifting the innovation map?
Well, it's really interesting. I think the U.S. seems to have
Yes.
a real benefit in technology and innovation because of the companies that it builds and its ability to go to market to bring that financial innovation or that innovation into a place where there are financial rewards. People can run their companies and own their companies and have a lot of agency, which is all very, very positive. China seems to be right now graduating people with a lot of technical skills at a rate that somehow in the US we can't. So there's a lot of educational excellence in China, but I think building and scaling a company is much more difficult there. And what I've seen so far is for really new innovation that breaks ground, it happens in America first, and then China does a great job of copying it and replicating it, maybe scaling it. We'll see, I guess, how AI goes. The U.S. as I said, a lead, I think, in AI so far. China seems to have made more of a bet on open source AI, but the kinds of protections around data and privacy and the scholarship that feeds AI models is still something the U.S. has an edge in. So um, I think where China will be, I think if China moves towards more of that protection of private property and let founders build and scale and innovate and enjoy some of those financial rewards, I think then China will become more of a threat. But I think they have kind of shot themselves in the foot over the past 10 years by not providing that to their entrepreneurs. Um, India is fantastic. I think it's a terrific. From everything I've seen, the kind of growth and opportunity in India has been really, really good. They're probably 15 or 20 years behind China in terms of their growth and progress on innovation and how the market has gone. But I think they're going to end up surpassing China because they do tend to be more entrepreneurial, more innovative. I think they have better protection and support for their entrepreneurs. And a lot of Indians want to come to America. The U.S. and India, I think, have a very good relationship and one that'll hopefully continue to grow. Many of our best CEOs, CEO of Google is Indian origin, the CEO of Microsoft, Satya Nadella, is Indian origin, and so that continues to be I think a very big positive for India because of that relationship with America and the trade relationships that they have.
So, if we could talk about the America H1B1 issue, and also the immigrant founders ecosystem, for what's the one policy you would change about the H1B visa system if you had 5 minutes, let's say in front of Congress?
Yeah, I would say, what's the one thing I would do? So I think the way it works now, um, that's a great question. So the way it works right now has, I think, a couple of limitations that we should acknowledge. One is that there's a very small number of H-1Bs that get granted. It's only 85,000 a year, and I think that number's been the same for the past 30 years. So even though the population has increased and doubled over that time or whatever it has, we haven't increased the number of H-1Bs to keep up. So it's a very limited number, and so you get a lot of applicants. You probably get a million applicants for these 85,000 visas, and that makes the process extremely difficult and expensive. And that means that companies will try to game the system by creating a lot of applicants for the process and trying to get more allocations. And I think that's made the process not it's a I think it's a great program. I mean, a lot of great people have come to America on H-1B, so I think it'd be silly to eliminate the program. I came on H-1B. Elon Musk, Max Levchin was the founder of PayPal. He was on H-1B. Satya Nadella came on H-1B. Sundar Pichai, CEO of Google, came on a H-1B. Sergey Brin, founder of Google, came on an H-1B. And Melania Trump came on an H-1B. So before you criticize Donald Trump for the H-1B program, just you should be aware, right? That's how he got his wife. So there are a lot of positives on the program, and I actually think it should be expanded dramatically. But I think the requirements I think are that you should insist on is if you want the 85,000 people or maybe 850,000 people to come here to be on that H-1B program, I would say here's what you should do: make sure that there's a job they have in the U.S. that the country needs. So if you are applying to the H-1B program and the job you want is to be I don't know, a lawyer, I would say we have too many lawyers in America right now. We don't need any more. If you want to be a regulator or a politician, we don't need any more of those people. Go to Europe or go to Canada. If you want to be an engineer, if you want to be an AI programmer, a nurse, a manufacturing worker, like we should expand the program, but just specify the occupations that we need. Right now, it's a very haphazard program. When I went through the process, we had to advertise and put out job descriptions and make sure that we were meeting certain qualifications as far as describing the job, and then we had to have tens of thousands of dollars on legal fees to kind of refine the job application, and we're trying to figure out what job description does this fit into, and all that kind of made no sense to me. It just should be very clear when we have job skills and occupations where we need, we should make it really really easy for someone to come in and be a nurse and be a doctor or to work on a manufacturing line in some kind of advanced manufacturing. So really simplify the process, not have all the 6 months of waiting and the legal fees that'd be the best thing. And then I think the counter that I would give is, the concern about immigration is that they're coming in to take jobs that Americans want or can get. And then there's also a concern about, well, are these people going to, suppress wages and I guess dilute the employment pool of the U.S. And I would just tell Congress, like just as a reminder, we have 160 million people with jobs in America right now, and an unemployment rate of 4.3%. It's not like 85,000 immigrants is going to change that dynamic. We're not changing the unemployment rate of Americans. We're not actually, diluting the labor pool. We're not competing away wages. Just the opposite. Elon Musk alone has created millions of jobs in America, probably created trillions of dollars in shareholder wealth. Can you imagine if he took that skill? What if he had stayed in Canada because he couldn't get the H-1B? What if he started his company in Canada or the UK or Singapore or the UAE? Then where would we be?
Yeah.
There's just there's such value to bring from the immigrants, but just streamlining the process and making it easier and smoother, I think would make a really big difference. I remember when I came to Canada, it was actually a point system. My parents had to fill out a point scorecard. They would say, if you speak English, you get 2 points. If you live in a certain city, you get 2 points. If you do the job we need, you get 2 points. It was very smart, and it brought the people they needed and let them live in the cities that they wanted. And then my mother had to sign an agreement saying, I'm not going to take government welfare benefits for however many years, 10 years. And so she had to prove some kind of financial certification that she was self-sufficient, which also makes a lot of sense to me. If you're an immigrant coming to America and you're going to take government benefits and you're going to be a drag on the financial system in this country where our deficit is already $2 trillion a year, that's not what America needs right now. And so you have to make some bargain where you're going to be financially self-sufficient. And if you don't have that, then you should leave and go back. But come here to work, play by the rules, and pay the taxes, and then be a net positive. And I think it's like hiring a person in your company, right? When you hire somebody, you're looking for the right skill and the right person, and you don't want that person to be a drag on the team. You want that person to move the team forward. And so I would just redesign the process through by modifying the application to make sure that's what we're getting.
Aman, we've been chatting for a while, and I want to be respectful of time. So please tell our listeners where they can find you in case they do have questions, and talk to us about your upcoming book, please.
Yeah, perfect. You can find me online. I'm the general partner of a venture capital firm here in the Bay Area. It's called Practical Venture Capital. You can find us on the website, practicalvc.com, and you can learn a little bit about what we do and some of the things that we're investing in. We also have a podcast every week. It's called Trading Places. You can find that online as well, or wherever you get your podcasts. The Trading Places VC podcast with myself and Dave McClure. And then the book's coming out at the end of the year. You can find that at bigbubbletrouble.com. It's a financial history of financial bubbles. It goes back to 1636 in Amsterdam and does 10 financial bubbles all the way up until AI right now. But it covers the 1720s South Sea Mississippi bubbles, the UK railway mania in 1845, the dot-com bubble, the 2008 subprime meltdown. And each chapter is like a standalone on each of these bubbles, and so you'll get a feel for what happened, why the bubble happened in Amsterdam and not London. Why was it in tulips? Why not I don't know, land? And you get a feel for some of the personalities in each of the bubbles, the heroes and the villains. And then you'll get a little bit of a perspective on, okay, remember when we talked about these bubbles, here was like a sequence of things that happened, and the same things happened again, and the same lessons that we didn't learn the last time happened this time. And so it implicates government policy. Why do we not learn from the last one? And then a little bit about what investors can do with things like AI, or if they are we in a bubble, and if so, how do you navigate it? They're all things that you can pull from history. So I hope your listeners will get themselves a copy, and I hope they'll enjoy the book.
Immigrants, if you're listening, that's big troublebubbles.com. I believe that was it, right?
Yeah. Bigbubbletrouble.com.
Bigbubblетrouble.com. Again, bigbubblетrouble.com. Aman, what is the one thing that you wanted to have a conversation with immigrants today that we did not address?
we covered. I think we covered so much. We covered financial planning and how to get ahead, wealth creation. I think we covered the kinds of jobs to look for. Um, I think the last thing I would just remind everyone is, which I think most immigrants already know, but I would just remind everyone. Um, I know it's tough coming to a new country and these communities that you have to adapt to, and the business environment's different. It always feels difficult, right? Like you're overcoming a lot. And sometimes it also feels like maybe America doesn't want you here, doesn't welcome you here. I can tell you, I just had such a great experience in America. I'm so glad that I'm living in here, that my daughters are here. They get to live in a country where they can be wherever they want to be. They can love who they want to love. They can marry who they want to marry. Well, if my daughter makes a bad choice and marries a stupid man, daddy might be very angry. But legally, there's no obstacle to being yourself. They can write books and not be censored. They have free speech and First Amendment rights and Second Amendment rights. There's just a lot to feel really good about in America. And so it's great. I think that's a great positive that you're here. And I think it's also important to remember, life goes up and down, right? Roses and thorns. There's a lot of great things, and there's a lot of very difficult aspects of life. And whether it's Elon Musk or Peter Thiel or myself, we've all failed. We've all launched companies that failed, didn't go anywhere. We all, had ideas that didn't work. We all made investments that went to zero. And that's going to happen. It maybe happens to immigrants more than others. But you live for those joyous moments in life, and they're always coming. And it's just never as dark as the darkest moments in your life. And it's always there are always opportunities, and even in those dark moments, to learn a lesson and to build something better. So I hope that's inspiring, and I hope that that's something that you find is valuable, and something that it's something you want to work towards, and will benefit from.
Excellent, excellent. Immigrants, you can follow the pod on TikTok and Instagram at the Immigrant Nation, and on Facebook at Immigrant Nation Podcast. On LinkedIn, it's the Immigrant Nation Podcast. Please, sir, tell our guest one more time where they can find you,
Where they can find this podcast.
where they can find you on social media.
They'll find me. Yes, you can find me on our website at practicalvc.com, and you can find the book at bigbubbletrouble.com.
Aman, thank you so much. I appreciate your time. This was so much fun for me. I hope it was the same for you.
That was great. Thank you, Martin. Appreciate it. Had a good time.
All right. Hey, we should talk sometime soon. And when I get back to the Bay Area, when I come to visit, please, we should hang out.
That sounds great. Where are you? Where are you right now?
Right now, I am in Houston. I have a business here, but my home state is Florida.
Oh, super. Beautiful. Good for you. That's great. Okay.
Yeah,
Anytime. We're happy to host you. And if I'm in Florida, I might look you up.
that would be great. Thank you so very much.
Okay. Thank you.
All right. Thank you, sir. Bye bye.